Hi, this is Roy from Norse Effects. This video today will be all about gold and how to do technical analysis on multiple time frames. And the reason why I'm choosing gold and today is because I think I have a failed setting up right now. So this will be the perfect opportunity for me to come in and show you what I do when I start to run into trouble and everything like that. Because the last 6 months or so, 6, 7 months, has been extremely easy to trade, at least for me, and I haven't had that much trouble. I ran into trouble with trading the reversal in oil, but the rest of the other big trades, they had been very smooth in terms of price action and consistency. But right now on gold, let me show you. I'm currently short on this particular setup, but I think that we have a chance that we might see a short squeeze coming in right now. So the one of the factors I think will be the reason behind the short squeeze, if it happens, is the current the volatile action in the stock market. So there's a lot of uncertainty if this is the start or the beginning of the end, basically. Personally, I don't think that the stock market is going to crash, but we do have some warning signs up there. So we have the increasing interest rates in the US and everything like that. So we might see something. And the reason why people then tend to flock into gold is because this is a safe haven asset. So when people are thinking risk, well, they buy gold. So that might be a driving factor behind it. And so what we are looking at right now today is a doji candle or a hammer candle. So this candle right here, let me just put an arrow to it. This one right here on the 8th of February, that is called a hammer candle or a doji candle. So they are reversal bars or reversal candles. So, and we are also bouncing from the EMA 50 on the daily chart. This is the daily chart, by the way. And I have marked out the 5 last bounces that we saw a hammer or a doji inside of the reversal itself. And I will walk you through how I actually go about finding these types of trades and how I actually enter these trades and what kind of stop I use and stuff like that. So you can see going forward if I'm actually able to make money from this setup or if I'm going to lose money. So let's start off back in, we will start back here. This daily hammer on the 27th of January of 2017. So we are now in a time machine going back. So this box right here, this is the range of the hammer candle itself. And you can see here the following day price broke out and retested the hammer range and then starting to go higher. And the reason why I have the EMA 50 on my chart is because I have a handful of strategies and the EMA 50 is a part of many of them. And I actually I have a EA using, so the EA uses the EMA 50 to execute trades. So I went out and hired coders to build myself a expert advisor for MT4 that can execute trades for me, because when price touches the EMA, I just like the reaction and the trend following aspect from it, and it makes my life much easier, at least when I'm trading these types of setups. So we can see here the range, we had the breakout outside of the range coming back into the daily hammer itself, going higher and bouncing and going higher here. So we can see going to the next one. So you can see what all of these setups have in common. So we have the hammer back here. This is the 10th of March, so 2 weeks later. The range, we have a breakout outside of the range and price is coming into the daily range of the hammer candle itself. This setup actually could use a trend line, so this is just one of them. And we broke out in early late New York session. So this is not a news-driven event. This is just a short squeeze in general. And you can see here, if you chase price, it's not a good idea. And eventually price is coming back to the EMA 50 two times and starting to go sideways and then going higher again. So let's head over to the next one. So the third in this video. So you can see that I'm using the daily chart to get the reference point. So the candle derives from the daily, and the execution and the planning all takes part on a 1 hour. And the reason behind that is I like to trade in the direction or trade a daily setup. So a setup that could last for months, but I want to execute on a 1 hour time frame. So I can play with a smaller stop, so I can use a bigger position, so I can grow my account at a much more exponential pace than I would if I had traded on the daily chart itself, or the weekly for that matter. So that is why I combined both the two worlds. I have a project going on right now, so that I want to go actually back on the 5-minute chart, execute trades there with a 5-minute stop and play the daily. But so far I keep on running into dead ends, so I still have a lot of work to do. But I'm an entrepreneur and I like to create projects for myself to keep myself busy and really find, so call it a chase for the golden egg or the holy grail or whatever you want, but I just want to do stuff like that because I know there's more to this market than we know at this point. But that is where I am right now. But back to the analysis and the examples. So we have the range right here. We have the breakouts, and then we have the retest of the range itself. Another one, price going higher, bouncing from the EMA 50 again, and eventually going a lot higher. So this is why, again, why I hire people to build myself this EA, because I can't stay on top of the market at all times, and having people on the payroll is very good because my robot, he makes my life very easy because he got me in a trade in the Asian session. So I live in Norway, that is in Northern Europe, and while I was sleeping today, he actually shorted gold based on the trend line I will show you in just 2 minutes. But here, another hammer, we have the range itself and we have the breakouts, but this itself is not a breakout I would be able to buy. Basically, I don't like breakouts themselves, especially not longs, but sometimes they work and sometimes they set up. And I can tell you this is not a setup I would have been able to execute myself. It's just too much clutter. But then you can see here, after the break was on the 13th of December, and we had a retest 2 days later and another retest. So there's always another chance to get in if you miss the boat. If you have been on forums and message boards, everybody inside of message boards and forums like that, they always tell you to get in, don't miss the boat, and the train is leaving the station, and blah blah blah. You have seen it before, but in my experience, price always lets you get in on another day or another week. So because the market, especially gold, oil, and stuff like that, they tend to trend for an extended period of time. So having FOMO in a market like this is unnecessary, because if you miss the first trade or the second trade, there's, yeah, okay, so what? You just wait a day or two and just be more proactive with the market. So if you're having a full-time job, just check the phone like every hour or every 2 hours, set alerts, and then you can take advantage of it back then, or do what I do. I just use an EA to get me inside and get me in the trade itself. So the EA, he just executes the trade, places the stop loss, and the trade is mine to manage, and the EA will not do anymore, and then the rest is up to the market. So this is the current situation with gold. So we have this parallel channel setup right now. So I got executed right here. This was at 2 a.m. Norwegian time, so I was sound asleep. And we got some movement. When I woke up, I just took a manual trade myself, since the EA had already executed on another account. But the ghost feed you're seeing right here, right now, that is if price actually starts to make higher highs right now and stopping me out, my stop is 1331 or 32, I believe, right around this high. And so if I get stopped, I will just simply wait until price trades back into the EMA 50, execute the trade, and see how much money I'm able to squeeze if there's an upside squeeze based on the uncertainty in the US stock market. So that is what I'm planning to do. But right now I'm still keeping my short, since I might be wrong on this warning sign, because the hammer and this breakout we are seeing right now, this is a big warning sign that there might be a short squeeze to come. But if we start to fold back inside of this channel, then I still have a green light on this current setup. So right now we are retesting, so I'm not doing anything right now. But later in the week, if we start to trend higher, I will look to go long based on the EMA 50 itself. So as you have seen in this video, there's no reason at all to chase price. Just wait, give it a day or 2 or 5. The market will give an entry. So that's it for now. So you can watch how I go with this setup. So thank you very much for watching, and I wish you a good night and goodbye.